Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Tuesday, July 8th, in the middle of the U.S. session. The U.S. dollar has been tentative this week because traders are awaiting Wednesday's FOMC meeting minutes. Let's take a look at the U.S. dollar index, U.S. dollar yen, euro dollar, and the pound dollar. The U.S. dollar index rallied last week on the back of a strong non-farm payroll report, which showed 288,000 jobs added to the U.S. economy in June. This rally broke above the falling trend line, seen here in the 4-hour chart, but the rally has not been able to sustain this week. The 4-hour chart shows a mini head and shoulders pattern completed, from which the U.S. dollar is falling and challenging July's rising trend line. Basically, the US dollar is at the crossroads, questioning whether to continue July's bullish attempt or respect June's rounded top. If rate hike expectations are to be pushed back, we are likely to see a slide in the US dollar. But if the FOMC minutes show no concern of Q2 growth missing the bank's own forecast, then we might see the US dollar hold above 80 and keep some bullish bias in the short term. Even if the market is not in bullish mode and it's in consolidation, there is still that short-term bullish bias or bullish upside risk towards the 80.50 pivot here, and then some common highs and a support resistance pivot around 80.70. The US dollar Japanese yen pair is bearish this week, reverting to levels before last week's non-farm payroll report. The 4-hour chart shows a slide below a recent rising trend line, invalidating last week's bullish breakout. The focus is now on the 101.25 low. Dovish FOMC minutes would likely send the pair lower toward the 100.75 to 100.85 lows on the year. Otherwise, look for the dollar Japanese yen pair to continue consolidating, which means that there would be support if price does approach that 100.75 to 100.85 area. The 102 level is roughly in the middle of the price range since May, so look for the market to oscillate around this level until further directional clues. The euro dollar is showing some resilience this week, climbing back above the 1.36 level. The pair is just coming off a bearish breakout last week on the back of the strong non-farm payroll report. So the bias is bearish heading into the FOMC meeting minutes tomorrow. Dovish FOMC meeting minutes should help the euro dollar push higher and push towards the 1.37 level. It should allow the euro dollar some bullish correction period. Neutral tone, however, should allow the euro dollar to continue its trend, which has been bearish and maybe sideways at the moment. But that would, but because of this prevailing bearish swing, we would have some short-term bearish or near-term bearish downside risk towards this 1.3505, 1.3520 area, and even the 2014 low at 1.3475. But that area might hold unless we actually have hawkish FOMC meeting minutes, which means the FOMC would be optimistic about second quarter growth even after the first quarter GDP revision, which was negative 2.9% on an annualized rate. If we do see optimistic growth expectations, then the US dollar is likely to strengthen and the euro dollar should fall in a hurry towards that 1.3475 to 1.35 area. While the prevailing trend in the euro dollar was bearish, the prevailing trend in the pound dollar has been bullish. In fact, it is just coming off fresh highs on the year established last week. Whereas a neutral tone in the FOMC minutes would allow the euro dollar to continue its bearish mode, the neutral tone should allow the pound dollar to continue its bullish mode. Dovish FOMC minutes would likely push the pound dollar to new highs on the year, and in a hurry. A hawkish tone could push the pound dollar into further consolidation and maybe even bearish correction, but the downside target should be limited towards these lows here around 1.6920 up to 1.6950. Thanks for watching today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you good trading and safe trading.